Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors, and welcome to this Monday edition of Benzinga's PreMarket Prep, brought to you by Thinkorswim. I'm Spencer Israel, as always, joined by Joel Elconin and Dennis Dick. Got a great show for you guys today. We're going to talk about options expiration. Dennis got some hate on Twitter on Friday, so he's going to rant about that. We got a merger with LifeLock and SYMC. We got a big Facebook buyback and some earnings still trickling in. So, Joel, how was your weekend?
Very good, very good. Nice Michigan victory. A little bit cold, but very nice. We got the S&P futures trading up 4 points this morning. Quiet range on Friday, kind of a tight range today, holding Friday's lows and haven't taken out Friday's high, an all-time high up there at 2187.50. Crude getting a nice bounce. Still some talk of some production cuts. Gold and silver in the green here. We can talk about gold, perhaps finding some support here at this magical round number of 1,200. Dennis, how you doing on this cold Monday morning?
What happened? What did you do to the weather? And I'm still fighting that cold a little bit, but I'm getting better. What'd you do to the weather, Joel?
You can't personally blame me for the weather here. I would have rather it been a balmy 70 degrees like it was on Friday instead of 25 on Saturday. But big change in the weather. Too bad you can't short the temperature.
Yeah, well, you knew it was coming. We were almost into December. We were seeing 70 degrees, but I can't believe it go from 70 degrees on Friday to 32 degrees on Saturday. Like 40 degrees, that's a wild swing.
Yeah, it surely is, but no really wild swings in the market on Friday, I guess.
No, disappointing. And usually, like I was saying before, option expiration usually gives you a few fireworks there, but there wasn't much at all. A little bit of movement, a little bit of continuation in some different stocks, but for the most part, Friday close and Friday open was pretty quiet.
All right, and you want to go into the options expiration rant?
Yeah, so I do want to talk about one thing, and I was tweeting this out Friday night, and if you follow me on Twitter, you probably saw my tweet there, and actually I can just go grab it if you want to. I'll just read what I tweeted on Friday night. That gave me a little bit of hate there once I opened up Twitter. I tweeted out that just remember that options technically do not expire until Saturday. So after hours movement on Friday will affect exercise decisions. And a lot of people gave me hate saying they think they expire at 4 o'clock on Friday. But they don't. And you know why? I know this because I did options for years, and I used to take advantage of after hours movements on Friday. So let's look at Facebook, because this was the example that I was citing. Facebook came out after the bell and said $6 billion buyback. Stock pops from 117 up to 118.50. Now, let's imagine, and there's a lot of open interest on a lot of contracts on Facebook. Imagine you had the 118 calls. Well, you can go out, sell short the stock in the open market, and you obviously have to have the money to do this because some people have really small accounts. This is another reason why you should have, be able to execute the stock against your options, because it opens up so many more strategies for you. But you could go out and, let's say, short 118.50 after hours when it was spiking up. Then all of a sudden you have the 118 calls, which are technically out of the money because the stock closed at 117.02. But you just shorted at 118.50. So you can execute your OTM, your out of the money call at 118, and boom, and collect 50 cents if you shorted the stock at 118.50. Then you can go out there, and if it, obviously comes back in, well, once it's done, it's done. Your calls are gone. But just for example, the 117.02, it closed at 117.02. So the 117 calls closed around a nickel. And instead of just, outright selling them at 3:59 or 4 o'clock, if you were still holding them, you could have sold the stock short at 118.50, execute your 117 calls, and make $1.50. So just because, you have an option that expires worthless, if it's really close, sometimes it's worth money to check out the action after hours or even try to get out. Like what I would do sometimes, and because I have access to after hours trading, is, for example, if I had the 118 calls on Facebook, I would just do that. I'd throw out the stock at 118 and a quarter or 118.30, and who knows, maybe somebody after hours takes you, call you're obviously going to your broker, your platform, exercise your out of the money calls, and they'll warn you and say, you're executing out of the money call. I know because I just sold the stock at short at 118.30, and I'm banking 13 cents by executing that 118 call. So, there's different strategies to if you can execute the stock against your calls if you have the capital to do that. And that's the main thing, like market makers do. So some people might be coming in here this morning and be horrified if they had the 118. Let's just say they had the 118 calls written and they think, oh, it closed 117.02, I'm good to go. And they look this morning and boom, all of a sudden, they've been, put the stock, or they've, got the stock in their account at 118. They're like, well, what happened here? I'm, short this stock. And I thought, that this thing had closed at 117.02. Well, no, the stock went up to 118.50. So now you're technically shorted.
It's rare. I think, Dennis, the second thing that you pointed out is pretty important, and that's if you're on the writing end or the selling end of these options.
Yeah.
There is where you have the exposure. I think I have been in this situation a few times, and I've called in and I saw you could put on your accounts no exercise. And so, if you're long them and someone's going to still, you don't have the money in the account if you're short them. So I think it's probably more when you're like your longest stock or something, the calls expire worthless if you don't have the money in the account to be exercised.
Yeah.
Boom. But no, it's definitely. And Dennis, I'm surprised you got some hate on that. I mean, that seems like a pretty
Well,
simple
there's so many people that
concept.
tweet at me and say I didn't know what I was talking about. I was like, well, I do because I've done this strategy for a number of years and I've executed OTM options a lot of times. Just, something that closes near or at the money. If it gets a diamond in the money after hours, I will sell the stock short and execute my out of the money call. So, that's something to remember there. The Friday after hours action does matter. Now, it depends on your broker here as well. A lot of professionals are going to be execute probably all the way to Saturday. But if you're, got a retail broker, a lot of times they want those orders. I know, for example, at Interactive Brokers, for instance, I think you got to be in by 4:30. So call your broker and find out what time they need to know by to be able to execute an out of the money option. But you can execute any option. So just because it's out of the money doesn't mean you cannot execute it. So, and if it's technically out of the money at 4 o'clock on Friday, it might not technically be out of the money at 4:20 or 4:30. In the Facebook example, there was some money to be made by executing those technically out of the money options.
And that applies to the weeklies too, because Dr. J is saying monthly expiration on Saturday, but weekly on Fridays. So is it the Fridays? Are they exposed to that as well?
The monthlies for sure. I don't trade weeklies, and I've never researched it, so I can go and find that out for you, though. The monthlies for sure, because this is a strategy that I used to employ for years before the weeklies came out. I do not trade weekly options, so I can't comment on that because I've never researched it.
Okay.
But Dr. J is saying weekly on Friday, 4 o'clock. So let me do some homework. I'll go ask the questions here. I'll come back with you with that answer on a tomorrow's show. But I never trade weekly options. I usually just trade the monthly options. Obviously, we had a monthly expiration on Friday. So that's why Facebook applies. I don't know why they would do the weeklies on the Friday, different than the Saturday, but maybe for this reason that they do it. So that's a good point there, Dr. J. I'll find that out for you.
Look, starting to show out with some education here on this shortened week of trading. Thanks a lot, Dennis. Let's move on to the morning movers, and we got a merger going on.
Yeah, we do. Is it official here now, Spencer? Is LifeLock going off the board, or is it still just rumors?
No, I think it's official at this point. Symantec is going to acquire LifeLock.
And what's the price? What do we got here?
$2.3 billion. I don't have the.
I think I saw like $26.95 or something.
I think it's $24 in cash.
24 in cash. There you go.
Yep, I am seeing that.
So you're looking at it $23.73. Risk arbs are not putting much of a discount on this, only 28 cents here. So you can look at LifeLock here and say, okay, well, it is up to, it's up 14%. So that's basically over. Symantec doing SYMC in the pre-market, just kind of hanging out.
Yeah, let's take a look at that. I mean,
hasn't even made a trade. So that's why MC has not traded here this morning. It is bid at $23.75. I'm just going to go look at market caps because sometimes, market caps tell the story more than anything. Just seeing how big of a deal this is for Symantec. So the Symantec market cap as of the Friday close was $14 billion. And LifeLock, obviously, they're paying, what did you say, Spencer, 2.4? Works out to?
Yep.
$24. It's around $2.4 billion. So you're talking a little bit of, market cap on them. It's not a small deal, but not a huge deal either. Sometimes they do hit the acquirer there. In this case, they haven't done anything yet, so we're waiting to see what the market's response is going to be with SYMC.
All right, Locke will pay SYMC if merger fails. How does that work? And that's basically they. I don't know what the sum of money they guaranteed them to lock it up, but if not, there's a penalty if the deal doesn't go through. I don't see the size of the penalty here, but that's not such an uncommon thing, right, Dennis?
No, you often see the penalties. He's saying that LifeLock will pay though if the merger fails.
Oh,
Yeah,
okay.
that's a little bit different than usually there'll be something, maybe going the other way. So I've not read the details. I just read the headline. That's $24 a share. So there's always some interesting. There's devils in the details sometimes. So sometimes there's a breakup fee to cover the risk of the no deal is what Phil Chen is saying. So that is often the case. There is a breakup fee, but usually it's from the acquirer to pay the acquiree still a little bit
Yeah,
there. In
that's
this case, it's
different.
the other way. So it's interesting.
Just
So
a
semantics.
technical setup here in LifeLock. If you're trading this, you have three lows right at the $23.60 area. So look at that as support. I was looking at this thing on the daily, and this thing is not afraid to whip around pretty good. 23.25 has been the range. I guess the implications. I mean, they're not exactly all in the cybersecurity, but we haven't talked about that sector in a while. One stock that used to be talked about quite a bit was FireEye here. Looks like it has some resistance at 14, a little bit of a rally. Will this be enough to, get some things going in the cybersecurity sector?
I don't think it's going to hurt it. So, and you look at this FireEye chart, it is interesting here because it's had the big run up since Trump, and then it had a little pullback, a little consolidation. Gets going above $14, it could catch fire again, no pun intended. So, I like the FireEye chart here. As long as it holds, I would say that low from 2 days ago, 1332. I think the bulls are a little more in charge there. What about CyberArk, SYBR? There's another one there. None of these stocks have really traded much here this morning. I mean, we're early. CyberArk's had a couple hundred shares trade a bit higher here, but we're up with the overall market too. I will tell you though, there's a big bid, 5,000 shares bidding at flat 54.46 right now. So somebody's saying this thing's going higher here. What do you think of the CYBR chart?
Good support. You've last 4 or 5 days, you've had some consolidation here. This one is kind of seems like the bested breed is hold up. I mean, its all-time high is $20 above here. Huge range on this thing. Just about every day. I like the 54 support level. You did have that outlier 53.53. That was on Thursday, but two lows 54.04, 54.06. And Dennis, how often do you see a flat out 5,000 share bid like that in the pre-market?
Not on a stock this small, not very often. So somebody's fairly confident. I mean, 5,000 times $50. What's the air math on that, Joe? You're
Quarter
talking
mil?
pretty
Quarter
big
mil?
dollars there.
Quarter mil? Or
Yeah, well,
2.5?
10 would be would be 50,000. So yeah, so you're talking about somebody betting $250,000 here.
And what else? And
So
also we have Palo Alto Networks. Does that get a bid off this or not?
it's bid, yeah. PANW is starting to get bid here now. Just starting 165, started trading at 736. It's offered 163.50 though, so coming back in a little bit. 163 bid, so it looks like PANW might catch a little bit of a bid off this as well.
Yeah. Oh, this one has a little bit more of a breakout here. You've had three highs and just at this area where we're trading snuck above 164 on Friday, closed near the lows of the session. Let's see if it come back and hasn't even taken out Friday's high. Keep an eye 64.57. Buy Apple with the heads up here in the chat. PANW has earnings tonight.
Yeah. And there's also, let's jump into the earnings reports here because we did get a couple this morning. One that is getting beat up big time here. Finally, Joel, and we're going to be right about this, so it just took forever. Tyson Foods, TSN is down 8% here in the pre-market. It has been getting hit here really for the last couple of months. They've been selling some of these defensive stocks. We know that. Stock topped out multiple times at 76. I mean, we were trying to sell it all the way up, at least on paper. We were trying to sell it all the way up because we kept dogging it on the show. But it kept going up to 76, and now it's come back down. It's well below where we started dogging it, but it would have to take a lot of heat in the meantime.
Yeah, boy, oh boy, this thing is really getting pummeled here in the pre-market. How bad was that report?
Well,
Spencer, you got the numbers?
I do. We got 96 cents Q4 EPS versus $1.17. It's pretty bad. Revenue 9.15 billion versus 9.38 billion. That's pretty bad. Fiscal year EPS Fiscal year 17 EPS guidance $4.70 to $4.85. Estimate was $4.98. That's pretty bad. The CEO is stepping down and will be succeeded at the end of the year. That may have something to do with the chicken price fixing thing that was in the Washington Post a few weeks ago.
Wow, a lot of bad news here. Joel, tell us about the
Oh
technicals.
boy, I mean they've whacked this thing, and you got a pre-market low of 61.50. What's concerning
That's
is,
where it's at right
yeah,
now, pretty
yeah.
much
If you've only,
61.75.
yeah, now that is concerning here. Now you just 61.65, the low tick here. You have to go out to the monthlies and see where this party got started here in this run up, and that was right from the $60 area, that lone low that you had back in June of this year. You had a low at 59.45. Dennis, I'd almost say we're not going to get there today, but just the way this thing is just not showing any life here, that could come into play. Maybe a 60 psychological level comes into
Yeah,
play.
I think it could come into play. A buck and a half away only now. And this thing, they're hitting it pretty good. Like you're saying in the pre-market, it's not showing any life at all either. Like it just keeps leaking here and right near the lows. So this is still in the price discovery phase here, and it's an ugly report.
Would I rather be long Tyson Foods or Dry Ships? Boy, that's a
Somebody asked that?
yeah, David
Who
B.
asked that?
Well, I guess you could look at it two ways. Dry ships, if I buy that, if I buy 100 shares, what's the most I can lose here?
1,100 bucks.
Yeah,
Well, no, 12.50 because it's up a buck 50.
1250. I mean, Tyson Foods, I mean, at least, they have a product and, they have some
There's some
earnings.
value there. We don't know if there's any residual value here in dry ships. I mean, dry ships is just the casino stock of casino stocks here right now. Did you see the action on Friday? Stock opens up right around 11 bucks, runs up to 20, and then gives it all back by the afternoon and closes back in the 11 handle. I mean, stock here, stock runs up 100% and then gives it all back in one day. It's unbelievable movement. I mean, if you're good at the trading this kind of stuff, I know that the short's still a tough. It's still been a tough locate, so you might not be able to make it on the short side. But I guess if you're good at calling these bottoms here, they had the psychological $10 level and we had a huge bounce to 20 off of it. But I still say when the dust settles, I don't know if there's much of a story here. I still think dry ships is in a world of hurt.
Yeah, and nice ranges on this over the last. I mean, it's hard to tell even with the 15-minute chart, but currently trading here at 12:45. Expect some volatility here in this issue.
Canadian Solar CSIQ also reported earnings here, and it is trading down in the pre-market. Spencer, how did Canadian Solar do?
It did 27 cents, which was in line, and revenue of 657.3 versus 685.3 million dollars. So a little bit of a miss there. They do see Q4 revenue at 600 to 750 million dollars. 831 million was the estimate.
Stock's trying to hold on here. I mean, we're only down 2%, but we've just been talking this sector. I mean, if you got Trump coming in, and I know it's Canadian, but still, all these solar companies here, I think subsidies are going to be trouble for them, and they've all been pretty much straight down since Trump has got in. I know Solar City's the exception because it's trading off Tesla now, but you look for solar, they lowered guidance here now. It's been, it was up, where was it? We're talking about $34, $35 now, 29 since Trump has got in, and you look at all the other ones in the sector as well. I mean, CSIQ is underwater here too. I mean, it was up at like 14 bucks. Now we're down here at $11.70 or $11.50 here. Hard to get bullish this sector when you've got somebody coming in that's so capitalism. I just don't see the subsidies that these companies got before.
Yeah, if you're going into rally mode, keep an eye in the $12 area. I couldn't quite get there on Friday, but on Tuesday, Wednesday, and Thursday, actually the other days of the week, the highs right around 12. So expect that to be resistance. Your pre-market low has been at 1090. The big level, if this thing really can get in reverse motion, 10 and a quarter. That was your November 9th low, so 10 and a quarter, $10. Probably better places to bring in a short than it is to attempt a long here in the solar sector.
We talked Facebook in regard to the options, but we didn't talk Facebook with the technicals there because they are doing a $6 billion buyback, which was announced there after the bell, and the stock is up $1.50 here this morning. Joel, is this going to put some life back in Facebook? Because Facebook has been a pretty rough ride here since Trump got in. Do you think this sparks it, or is this just a rally to sell?
Oh boy. I tell you, what's interesting about this one is it gets the bad news, and they hit it pretty hard, but it comes back, and it's done that
Yeah.
quite a few occasions. I just think you got a lot of overhead supply in this one
Yeah.
from the old time high. So yeah, it could get a pop. I just don't look for it to really be running back up to 132. Just the way the rotation has been out of these
Yeah.
kind of stocks. Pre-market
Yes.
high 118.61. Currently trading at 118.47. So I don't know. I mean, if it really keeps going and you're looking to get out here, maybe look for this high above 120. 120.70, that was your high on November 11th.
Yeah, I like the 120 number, so I think it gets up there. I think that's going to be a bogey that people are going to use here. So I may even try from the short side at 120. So gets up another buck and a half. I feel like 118 and a half is kind of in the middle of nowhere, but I
Yep.
like that 120 level, psychological, and it was a little bit of support there at the beginning of November. I know it cut through it a bit, but in this decimal laden world, you got to kind of round a bit. So calling 120 the big number.
All right, S&P futures up 5.25,
The banks are
21.86.
strong.
Yeah, the banks are strong.
They just do not, every time they pull back even just a little bit, people are just buying these things. So I don't know when this trend is going to reverse, but like they say, the saying, the trend is your friend. And I mean, if you're trying to short these stocks, it's been a rough go. Here's Bank America, pulls back 50 cents, and they're right buying it right back up. And you know what this chart looks like? It looks like consolidation to go higher, which is, just unbelievable. So we got three tops right in the same area: 2018, 2022, 2014 on Friday. Now we're trading up here 2014 again, kind of getting a running start at it. This could be breakout day again here for Bank America.
Yeah, look at that. You got a series of highs. Dennis just mentioned a seller's been lurking at the 2020 level. 4 out of 5 highs last week, right around 2018 to 2022. So there you go. There's a level to take a look at for potential breakout. Once again, you look at it on the daily charts and you're like, oh man, this thing's bearish here. It needs to come in. Too big of a rally. Then you go to the weeklies and wow, it still looks bearish, but you go long term here and the party just may be getting started here in Bank America, trying to climb over $20 for the first time since 2010. We traded up in the middle 23s. I think I did a little article on this on Friday. Back in 2008, I think you had a high right at the $23 level. So looking itchy, $20, huge level here. We'll see what it does at 2022. Flack UK, thoughts on HSBC? It has a nice dividend. Getting away from the U.S. financials. What about financials in other places?
6.46%. I do like the dividend on it. The one thing is it has been on a pretty good run here too. I mean, they all have. So I mean, you are chasing a bit here now. 28.62 was the low in July. You're talking about a stock that's up here near $40 now. $40 is a big psychological level. It is a tough level too because in July you kept topping off at 40. In October of 2015, so I'm going back a full year, July. I'm talking July of 2015. You were topping out at 40. Then he got up to the 41 area in October 2015, and then 40 and a half in November and December. It really struggled in the 40-41 area for about 6 months at the end of 2015. Now we come back into that area. We know price. We say that has memory. That makes me think another dollar to a dollar and a half higher here, it could struggle again. So just looking at just from a pure technical perspective, there is some major resistance it's coming into. Now the other thing is though, financials have just been hot. They're hot everywhere here. Not only HSBC, obviously not only the U.S. banks. I mean, these European banks have been unbelievable here for the last couple of months. Deutsche Bank everybody threw it out when it was down there at $11. It got up to over $16 here. It's trading $15.90 this morning. I mean, a lot of the other ones too have come back a long way. So financials have just been finding buyers like crazy. So just because the stock has resistance doesn't mean it's not going to break through it.
6% dividend too. I mean, that gives you a little bit of downside protection. But $39.99, that was your high back on Tuesday. So keep an eye on that. Been quite some time. I think one thing that you would want to confirm another move higher. You get 2-3 closes over 40, kind of like with the Bank America closing over 20. So we'll see what happens in HSBC.
Got a few ratings changes of note here. I'm going to go to Netflix first. Brian Capital is starting out with a buy. putting a $145 price target on it. That seems high to me, but we've seen these things do this before. I mean, Netflix has been consolidating here for 5, 6, 7 days after having a pretty rough. We know FANG has not performed well since we had the official announcement of Trump getting in and had the gap down. And, it's kind of just hanging out here, trying to
Wow.
find a bottom. I think, it gets above 117. You do get into a little bit of a gappier area, but at the same time, I think there's a lot of overhead supply here too.
Yeah, boy, I haven't seen this in Netflix in quite some time here. All these highs. This is going back to the 11th, and I'll just read them to you: 1663, 1590, 1641, 1612, 1681, and 1642. Let's just call 11650. Let's just call that 6-star resistance here. Someone stepping out ahead of that in the pre-market is the pre-market highs at 11632 here. So boy, you don't see that much in that much of a range, or tight range in stocks on the upside there. So keep an eye on Netflix. See if we can get a breakout. You got that big bar where you came down from the mid or lower 120s. So 11650, big number, Netflix.
Also, 3M getting downgraded to sell at Goldman
Really?
Sachs. Yeah, downgrade to sell here. Stock trading down 2 points in the pre-market. It's had a nice pop back, and you know what's interesting? So many other defensive stocks, and I'm going to say 3M, it's a staple. It's literally staple. So it's defensive here, and the stock's come back a long ways from its lows, where a lot of the other ones haven't. So I don't mind this call by Goldman Sachs. I didn't read, why they're downgrading it to sell here, but just thinking logically here, here's one, a defensive stock trading at 172. It's only 10 points off of its highs. Where you look at different stocks, even, like Procter and Gamble, it closed out its lows of the move there on Friday. It's now 8 points, or 10% off of its highs there. You go to some of the other ones, we know the utility's been killed, AT&T's and Verizon's. I mean, the defensive stocks have been kind of beat up, and this is one that's come back, quite a ways from those lows. So I don't mind this call here.
All right, let's take a look at Triple M. You had a big seller at the same area over the last 3 sessions. So if you get anywhere in that 173 handle, we're a little over $2 for that. 3 highs right to 173 and a quarter area. We're more interested in finding the support in this, and this could be a little bit tricky. I do see a low at 169.79. That was on November 10th. We're only a buck away from that. 170 could be a good level. Underneath that, your November 9th low, 65.84. So some big bars on here. Keep an eye on 169.79.
Also, Abercrombie and Fitch is getting downgraded at RBC to underperform here. ANF, we know the rough earnings report and the rough day on Friday did hold that 14 level, and that's why I wanted to make a note of it here, just because 14, November 9th was the low. Yeah, almost got down there on Friday, got to 14.19. So that's a bogey. That needs to hold that 14 level. I think it might, so maybe get a bounce there, but that's the critical level for it to hold.
Yeah, it's a little bit late to the party here on downgrade, trading a little bit in the pre-market. You have that same buyer that was out there at 14.19 on Friday. They're persisting here again. Only an odd lot traded at 14 even. 14.20 has been holding up over the last half hour. We mentioned before the low of the move has been 14 even. So a little late to the party here on this downgrade in Abercrombie and Fitch.
Let's talk oil. Oil is bouncing a bit here this morning here, and we've got a lot of the oil stocks trading up, and we haven't talked the sector for a while. And I just want to go to the big guns here because the consolidation here in ExxonMobil has been pretty incredible. I mean, it is just in a tight trading range. Some of the other ones have gotten higher, but the resistance at 88 has got to be one of the biggest levels I've ever seen in the last 3 months. I mean, just look at it from August, September, October, even November. We just kissed it again up there at $88, getting up to 87.99. So, your resistance very, very, very well defined here, and just looks like a huge institution just taking off a piece of 88. Because formations like this don't form usually for natural reasons. They form because of the big seller at the point.
All right, Dan. Dennis is giving you the resistance. I'll give you the support in this one. We do have it trading up 81 cents in the pre-market. In sympathy here with the move in the crude oil futures. Boy, oh boy, above this high where we're trading, not a lot going up close. A little trouble before 87 too. Coming back on the downside here. I'm sure a lot of people would like to see yesterday's high if they're short at 85.65, and good support at the double close of 85.23 and 28 from Thursday and Friday.
Couple other ones just to note here. Halliburton, big resistance up here at 50. I'm looking Chevron, CVX, if we're talking resistance levels. 110 seems psychological. ConocoPhillips, 46. And the reason I'm telling these is because a lot of these stocks are going to open or potentially test this resistance here this morning. Sometimes when they get back up there first time, sometimes it works, sometimes they break out. But, big points like this is where people are making big trading decisions. Alibaba, 218,000 a buy here this morning. Just looking at the imbalances, Bank of America has a little sell imbalance, 75,000 shares. I'd expect that probably to flip its trade up. The financials are very strong here this morning. But let's focus on the Alibaba one because that's the one really standing out to me this morning here. 218,000 a buy. Stock is trading up only 50 cents in the pre-market. What do you think of Alibaba?
Alibaba almost filled that gap that we've been talking about from the earnings and now has had a nice run up here. I'll tell you, $95. That's the key to the upside here. 94.98, Thursday's high. 95.30, that was the high on Friday. Still $1.10 away from there. Doesn't look like you're going to have any big moves on the upside until you can clear 95. Coming back on the downside, I'll call 91 decent support. We're $3 away from that, so I guess you have to come up a little bit sooner. 92.67 was a low on Friday, but 95 on the upside sticking out to me in Alibaba.
Look at the formation here in Pfizer. You had the big gap up on Trump Day, then you had a little follow through the next day, and now you've had 6 down days in a row here on Pfizer. This starts to get interesting here because you got a gap it's coming into as well. 31.50 was the low on Trump Day. The low on Friday was very close to the same thing, 31.44. We're trading up a little bit here again, but dangerously close to getting into that gap area.
Yeah, I would love to see it back into that gap area. I mean, I'm talking for a longer term play. Had that ridiculous run after the options. Now, just trading relative to the S&P, this is not getting much of a bump. We'll see. I mean, if it's going to go back into that gap area, unless it gets some immediate bad news, I think it's going to take a while. 31.44, that was your low on Friday. In order to fill the top of the gap, you need to get to 30.45, so you got $1 here to fill the gap. I'd sure like to see it do that for a longer term play. $30. This thing, let's go to a longer term chart. When is the last time this is traded under 30? Oh, I guess at the beginning of the year. But let's see if Pfizer can fill that gap. Got about $1 to go.
Merck getting into the gap area, Gilead starting to get, or actually filled the gap, Gilead here. So you've got a lot of stocks here that were showing a lot of life right after Trump and have just quietly given back a lot of those gains, the pharmaceutical stocks. So Lilly has come down significantly here from where it was there. So interesting that, these things had the big pops and, the financials kept going, but the drugs have kind of came back down to earth.
Flack is asking for the news on SPOO, and he doesn't mean the S&P futures. He's talking about Sky People fruit juice. Dennis, do you
I've never traded that company before, so I can go try to just do my sources here and just quickly try to hunt down and see, because it is trading up here about 20% in the pre-market. Just looking here at SPU news, I've never traded the stock before, but I don't see much jumping out at me here either. I just see, a lot of people talking about it on Twitter and stuff, but there's got to be something, though, here.
Yeah, there's a spike here in the pre-market trading while Dennis shuts that down. That's the 859. And then just going to the dailies here, let's see if we can get back up into that area because that looks like a pretty key area. You did sneak over 850 here on 4 different occasions back in October and early November. 875 to 888, that represents 3 highs. So for now, you're 50 cents off that pre-market high, getting a little boost. We'll see what happens if it can even take out that pre-market high. Dennis, you want to cover one more before we bring in Mark Mellon, who's the author over there at Value Walk? Is one more issue you want to cover?
Sure. Let's just look here over at McDonald's. We haven't talked MCD here for a while, and it has been coming back a long ways too. In the last week, look at McDonald's. It went from, last 2 weeks, went from 110.83 up to the big psychological 120 level. And look at that pin. they pinned her perfectly at 120 there. So if you had the calls or the puts, 120 pin was perfection there. Trading right down 30 cents here this morning at 119.70, but it's interesting, when you look at a 120 level, that is a big number here for Mickey D's.
Yeah, basically $8 rally here over the last week and a half, 2 weeks.
Quiet too.
Yeah, wow, 120.24. That was the high on Friday. Not only was that the high on Friday, but you have some monthly resistance there as well. Traded up to 120 in August and 119.24. So I think the best you can hope here, Mickey D's, is get up to this area, hang around for a while, absorb the seller, and make another move higher. But it looks like you're running into some long-term resistance here in Mickey D's. All right, let's take our break here. Bring in Mark Mellon, an author of Value Walk and an alternative investment practitioner. We'll be right back.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, and we have Mark Mellon on the line, author of Value Walk and an alternative investment practitioner. Mark, how you doing on this Monday morning?
Oh, good, thanks, guys. How are you?
Good. Thanks for coming on the show. You've covered a lot of different things in the markets. Give us a little bit of your background and what you're doing now.
Well, I primarily started in the algorithmic managed futures CTA space and taught a course at Northwestern University, wrote a book, edited another book. So that's really my background. And what I find to be most interesting is taking the technicals, the algo signals, and combining them with a fundamental understanding. It's not something you see a lot. A lot of times you talk to quants, and I know a number of CTAs in the space, and they only focus on the algo signals. They don't pay attention to the fundamental drivers. But from my standpoint, what's always sort of differentiated my approach is to recognize that it's typically fundamental news, fundamental information that drives market volatility, it drives trends, it drives relative value disruption. So those are the things I focus on from a technical standpoint, and then I try and tie it in with fundamentals.
Okay, so let me get it here. You see like the algorithm activity here, and it alerts you to a fundamental, or if there's some kind of fundamental pops out, then you kind of detect it, try and see what's going on in the algorithm market?
Well, usually I look for the algo signals, and then on a discretionary basis, I connect the dots to fundamentally what's going on. I'll give you an example. This election, the algo signals just, and a lot of the correlations, like the algo signals I tend to look at, there's different categories. There's basic price moving average algo signals, which is how the industry started way back in the 80s. But what I really sort of give credence to those signals is when I get a volatility confirmation or I get a correlation confirmation. And so if you just looked at the algo signals over the course of the election, I mean, they're sending some really, really unusual signals that very rarely do you see. I'll give you an example. Like, when the stock market was down 5% the night of the election, and then bounced back 6% the following trading day. There was a lot of fundamental talk that was a positive thing. From an algorithmic standpoint, seeing that kind of dispersion from top to bottom in upside and downside volatility is typically negative. And after the election, a lot of the correlations started to break down, and all the correlations have a fundamental root to them. So, for instance, the correlation between bonds and stocks broke down, but there were a number of correlations that broke down. So what I had to do is you take a look at the algorithmic signals, and then you have to, on a discretionary basis, try and connect the dots with fundamentally what's driving that.
Do you have your own private indicators that you use to detect algorithmic trading? I mean, we all follow Eric Hunsader a lot on Twitter. Have you developed your own techniques, or do you want to share with the crowd what you look at here to detect the algo movement?
It's a combination. I'm not going to take credit for other people's work, but by and large, I've been in the managed futures CTA space for a while. I actually ran a hedge fund for a while. A lot of the traders, I know a lot of the traders on a personal level, and it's kind of funny. We tend to talk differently behind the scenes than is in public, and so I can usually understand what they're doing, how they're doing it. So I've picked some of what I consider to be the best algo signals that other people use or other people have indicated they use, and then I combine it with my own. So some of the correlation work, you don't see as much correlation work, or at least I haven't seen as much correlation work among the CTAs and the algo traders, but I've seen some of it. And so I've, in that case, I took what one, concept one person had outlined to me, and then I expanded on it. I look at algorithmic trading and CTA strategies from the standpoint of primary performance drivers. And when you understand what the overall market is doing based on primary performance drivers, it really helps to bring clarity to what has traditionally been a black box industry. And so that's really what I try and do is bring clarity to it, provide a strong foundation for understanding what's moving the markets. I follow Eric Hunsader. He's an incredibly bright individual. The HFT, like what he does for HFT detection, is a little different than what I do. It's micro pattern recognition, and the trade signals on a micro level. Some of the fundamental performance drivers are in place, but on a micro level like that, the variables are a little different. So I don't. For most hedge funds, the micro HFT isn't really a practical trade signal to watch because they can be so different and so varied at that time frame. To me, a short time frame is about 2 days to 2 weeks. Like a mid to longer term, short term time frame is 2 weeks to 2 months, and a midterm time frame is 2 months to approximately 6 months, and then longer term time frames are 6 months to a year or more. And each of those time frames, there are different strategies and sort of different triggers that have proven themselves successful over time.
No, that's interesting that you're deriving, longer-term trading signals because, getting caught up in the noise of the short-term trading could sometimes be frustrating. But if you can actually derive some long-term strategies and ideas from that, it's, more useful to long-term investors. So let's just talk about the hedge funds and the alternative investing crowd here. I mean, when you look back at 2016, the year's not over yet, but two monumental events, the Brexit and, the market tanking and coming back, and then the expected or unexpected outcome of the election. Same thing happens. The market dips and comes roaring back. Quite a unique year here on Wall Street. How are the hedge funds and the alternative investing crowd holding up in this volatile year?
Well, in terms of hedge funds and the alternative investing crowd, we really sort of have to draw a line of demarcation between the hedge funds that actually hedge and the hedge funds that take a non-correlated approach to the market, and then those hedge funds that are basically long only. During Brexit, the managed futures CTAs did very well. And I've got to tell you, Brexit was like the election. With the trade signals were really very unusual. The stock market did a V bounce, which it had done earlier in January, February of 2016 too. But a lot of the trends that managed futures CTAs were exposed to actually extended themselves. So while the stock market did the V bounce, there were primary trends that really extended themselves. Gold was one. There were a couple currency trends that were in place, and the managed futures CTAs actually performed very positively during Brexit. It was the only major alternative asset class to perform positively, and that's the history of managed futures CTA strategies. They generally perform about the same as the stock market averages. If you looked at average annual return, it's about the same as the stock market averages. The returns distribution is different. So you'll see that managed futures performed positively in 2008. When the world was falling apart, managed futures was there in a portfolio to hold things together. So that's, it's tended to be a non-correlated asset, although interestingly, the correlations inside managed futures have started to tend to be a little more closer to the stock market of recently, in the last few years. So I found that interesting, and keeping an eye on that. Like what happened in Brexit, managed futures was positive, and then we got into the summer where it really just seemed like the markets were put to sleep. They were lulled to sleep. They just kept going higher, higher, higher. There was very little volatility, and then in September and October, managed futures started to fall down. If you look now, depending on the index you pay attention to, managed futures went from positive about 4 or 5%, in the wake of Brexit, and now it's negative 2%, 3%. I haven't seen a lot of CTAs benefit from the election yet. Although there are some trends in markets, there have been moving average signals given, and then I've seen volatility and correlation confirmation. So I think some of the markets are starting to set up nicely. If I had to predict where managed futures might end, I think if we get trend continuation in a lot of key markets, and then there's some relative value mean diversion and then reversion. And I'm starting to see some of that reversion come into place right now. We could end the year up 2-3%.
From these levels?
Probably.
From these levels? Because that was going to lead me into my final question here. Big move after the election, major consolidation. Quiet here, making incremental new highs, new all-time highs. What are you reading from the the algos and the high-frequency traders now here going into the end of the year?
Well, the stock market has not given a signal. The stock market, even though the stock market has bottomed, that's still an indecisive market. There's a weak force of trend. I'm really paying close attention to the bond market, the 10-year in particular. The 10-year is probably the U.S. 10-year Treasury note is probably the most positively trending market currently right now. And I'm also, on a fundamental basis, so those are the algo signals. So on a fundamental basis, I'm also watching for sort of a central bank trade to play out. In the United States, we're raising interest rates. There's every indication that Janet Yellen is going to raise interest rates in December. It probably will not have any meaningful impact on the economy. What it does to traders is another issue. But I think that's going to create some interesting currency pairs. One of the currency pairs I've been watching reignite recently since the election is the Japanese yen-U.S. dollar pair. So I think that on a fundamental basis, I'm keeping an eye on a lot of these central bank-related trades, particularly the negative interest rate markets, Japan, the euro, I think is interesting, and then the dollar, strengthening, I think could be a trend that could have some legs.
Mark Mellon, author at Value Walk, and an alternative investment practitioner. Mark, thanks for coming on. We'll speak to you again soon.
Thanks, guys.
All right, it is 850. S&P futures just continue to climb here, up 6 points. The high on Friday, and the all-time high basis of December contract 2187.50. Dennis has been busy here doing some research on weekly options. What do you have for us?
Just researched the weekly and the monthly expiration. I do stand corrected. Actually, in 2015, Marty Kearney just reporting. We should get Marty Kearney on the show from the CBOE. He actually was reporting that they've moved the expiration to Friday. So there is no Saturday expiration on the options. I just messaged him because I know Marty, and I asked him what time, though, because I think the strategy I'm still talking about is still viable, because I would imagine they probably don't it's probably not 4 o'clock. It might be later than that. So if it's 8 o'clock, all your strategies are still viable, but they moved it to Saturday just for simplicity purposes here. So I've just messaged Marty, and once he gets back to me, probably today, I'll let you know tomorrow if the strategies that I was just talking about are still viable. But I guess you got to keep up with this stuff, because I'm not a big options trader anymore. I was in 2000 to 2010, and I haven't traded a lot of options in the last few years. I did not realize last year that they moved the Saturday weekly or Saturday monthly expiration to Friday. But if it's Friday at like midnight, then obviously the strategies that I'm still talking about are still very viable.
All right, Dennis, I want you to spend your morning apologizing to all those people on Twitter.
I'm not going to apologize, because I think the strategy is still viable there. So, but it is, I just stand as a technicality. It does look like they did move it to Friday, though. But if it's Friday at midnight, like I said, it's the same thing. But, okay, I'll apologize, because I stand corrected that it's not the Saturday expiration. But I do believe that the strategies I'm talking about are still viable.
All right, we got some chatter going on here about NVIDIA. Have you kept an eye on this stock?
Remember I got killed in there, remember?
Oh,
that's got to be one of my best
trades.
losing trades that I've had in a long time. I started shorting after the bell on the earnings report, $72, $73, and I was like, I am wrong on this. I started blowing it out at 75 and covered the rest at 77. Lost some pretty good money, but man, was it a good cover, because it's now at $94. That's all about admitting when you're wrong and getting the hell out. It was still, I didn't get out soon enough, but it was quick, after hours. You're talking about a stock that was there for seconds, and I basically was trying to call a top, which you shouldn't do anyways when the stock's still going higher. You taught me that way back in 1999, Joel, and I still sometimes fail to follow your advice, which was good. Short the stock when it's going down, not when it's going up. Anyways, we're up at $94 here now. It's been incredible here. You start to think maybe this is thinking about triple digits.
Yeah, and also on the run, I'll just give you one thing. Barron's did give you a little positive ink, so that could be symptomatic of a top. 2 highs up in the 94 handle, 94.33, 94.79. Currently trading 93.99, so you just want to see a continue move over 95 here to keep the rally going. And Ace's favorite stock, AMD, has been on an incredible run. Yeah, let's see if there's some paper to chew through here at $9. It did hit that in the pre-market. Incredible run, basically $2 in 3 sessions. So really, the AMD, if you look at this on a longer-term chart, I don't think this has been in double digits. Oh boy, 2010, late 2009, looks like it snuck above that. But A&D on a roll here. Oh my Lord, Tyson Chicken. Eat more chicken before Tyson goes out of business here.
Under 59 now, Bob Wire letting us know. There it is. It's under 59. It's under those technical support levels. Again, when I'm looking at technicals, though, I want to see it on the regular session take it out. So just because something breaches a significant support level during the pre-market session doesn't mean it's going to do it the regular session. So I'd still have a bogey around 59.45, but man, takes that out, you start thinking even lower here, and this stock is now out of favor.
All right, let's just look at this on the 1-minute chart, because we were talking about this and then how, let's see, the show started around 8 o'clock here, and it made those lows, and it just wasn't bouncing. I mean, usually when these stocks are ready to rip people's face off, man, you just, you get it, but it was just nothing. Long speaking, I don't know if it's more the earnings. I know there was a little rumors about some chicken price fixing and stuff. I don't know, 58.51, that's your pre-market low. If you're thinking of getting involved in this, really keep an eye on where the pre-market low is here. Sometimes that will hold, or you'll get a flush out below that level. and then it will come back. And perhaps, I mean, there's going to be a Hertz type rally in this at some time. It's just you don't know when. 58.60 trading on the lows of the pre-market session. 58.50 just prints.
We keep drifting up here on the S&Ps. There is a few sell imbalances out there, but they're pretty small. So just looking at some of the financials, it looks like some institution is trying to take off a piece at the open because Wells Fargo is 82,000 to sell, Morgan Stanley 82,000 to sell, Citigroup 28,000 to sell, Bank of America is still 22,000 to sell. But all of these stocks are trading higher here. So and they're trading higher on pretty significant volume, which makes me think that these are going to probably turn around and end up going higher here again today. I mean, this Morgan Stanley run here too had the big resistance at 40, stopped it there for 2 days, and then took it out on Friday. And now you just start going and looking at the next whole number. And, that's what we do. Me and Joel, when stocks are making new highs in the move or new multi-year highs or new all-time highs, that's the levels you got to look at because institutions do use those points. That's where you do have option expirations as well, which can sometimes be turning points. So that's why I look at when a stock takes out 40, I start thinking 41. Stock takes out 42, I start thinking 43. Those are the natural stopping points, is that these big hole numbers.
And boy, what a similar technical pattern in the S&P futures. You had the run up after Brexit. Now this is showing the rolling contract here, 21.9150. So you were trading the September contract. Look how long we got up there after the Brexit. July just hung up there. Wouldn't go down, wouldn't go up. Kind of a similar technical formation here. As I just might have mentioned earlier, we've been making new highs, but incremental new highs by a half a point, by a point, by a point and a half. Here, we've come in within 2 ticks of it. I think what you really need to just bury the shorts that are hanging out of this consolidation is that big breakout where we close 5, 6, 7 handles above the pre-market high. If not, it looks like you just have some incremental sellers here up at all-time highs.
So 856 here, just looking, if you're looking at what, is strong today, again, I've said the financials look a little bit strong here in the pre-market, but what really is jumping out to me is oil. Oil stocks look very strong here today. They have not been performing that well. I mean, some of them have been okay. They've kind of just been in a range more than anything, but this morning with the USO as much as it is here, you're seeing a lot of stocks trading up significantly in the oil sector.
And it just seems like if there's always somewhere to hide. Oh, I got to do CFL.
There is.
Yeah, if they're hitting
Yep.
tech, they're buying something else. So today it looks like they're hiding out in the oil patch. 46.96. That's your high, up $1.14 in crude. Just what was it? 5 sessions ago, we were down in the 42 handle at 42.20. Going here on the, this is based on the December contract. You have a high of 47.35. Let me take a look. Basis the January contract a little bit higher. That I think your resistance in the 47 handle, 47.50. Dennis, any final notes here before we wrap up today's show?
Just again, looking at those different sectors, I don't really see. I think staples could be a little bit weak here again. Sometimes you see this like a risk-on day. It's looking like here again this morning. So sometimes you see some of the defensive stocks are weaker. Those defensive stocks have been so weak, though. Some of these are due for a bounce eventually here too. Just looking, even at the utilities here, they've been straight down. I mean, Southern here had a real rough week. Started the week up at $49, closed right at the lows of 47. TLT's bouncing a little bit here this morning, but typically when they're putting on, they're jumping into oil and they're jumping into financials. They're jumping out of another sector, and it's usually some of those defensive names.
All right, let's go to Spencer, wrap up today's show and preview Tuesdays.
Yep, watch out for some notable earnings today after the bell. We got Jack in the Box, we got Palo Alto, we got Cena Corp, we got Weibo, a pair of Chinese social media stocks there, so watch out for those guys. On tomorrow's show, we've got a good guest, Ben Carlson. He's the author of A Wealth of Common Sense. Ben's not been on the show for a couple years now, so looking forward to having Ben on. If you missed any part of today's show, you can catch the whole thing again on YouTube, iTunes, SoundCloud, or Stitcher. Just, search Benzinga or PreMarket Prep on any of those platforms. Quick reminder about Benzinga Pro: you can get a free 2-week trial by calling us up at 313-723-2000 or by going to pro.benzinga.com. It's Benzinga Pro. It's Benzinga's real-time news platform with earnings, SEC filings, real-time news, headlines, analyst ratings, all that good stuff in there. So check that out again, pro.benzinga.com. thinkorswim.com. Please always remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. Hope everybody enjoyed today's show. We got only 2 more on this short week, so we're going to let you go right now. Have a good rest of your day, and we will be with you guys tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.